Good morning. You're watching Business World Live. I'm Danie, Laurel.
And I'm just Delos Santos. It's the start of a new trading day, but first, let's go straight to our top story. Economic managers now expect full year GDP to contract by 6%, which is on the low end of the government's forecast range. Finance Chief Sunny Dominguez attributes this to the reimposition of stricter lockdown under a modified ECQ scheme in Metro Manila and Calabarzon in August, which he said led to a spike in unemployment and disruption in the operations of businesses. The Development Budget Coordination Committee in July said they expect the economy to shrink by 4.4% to 6.6%, or an average of 5.5% this year. Dominguez again stressed the need to further ease restrictions and revive consumer confidence while maintaining health and safety standards to help the economy recover. He said the government is turning the health crisis into an opportunity to boost competitiveness of the manufacturing and agriculture sectors, to support rehabilitation of tourism infrastructure and facilities, and to accelerate digital transformation of the government to cut red tape. NEDA Acting Chief Carl Kendrick Chua said the economic team will revisit their forecasts after the release of third quarter GDP on November 10. Chua earlier said that the fall in third quarter GDP is expected to be softer than the record 16.5% plunge in the second quarter. All right, Dan, even with the GDP growth prospects dimming, Philippine stocks have been staging a rally this week to date. Is that excitement spilling over into Wednesday's trade?
It seems to be the case, Jess. So let's hope for a third straight day of outperforming the rest of the region. Take a look at the index right now, trading at 6167.94. A very strong start to trade. That's up already by 0.9%. It's just been 2 minutes of trade. So hoping for that to be sustained. And as I mentioned here, I'm just going to pull over the 3-day chart so you can see that movement and that rise. Take a look at that. 5.6% up in just 3 days of trade since Monday. Of course, yesterday we were up na by 1.6%. And this, of course, related to a lot of the things that you mentioned in your banner story. The government also easing a lot of the restrictions here, especially in Metro Manila, to stimulate economic activity. They shortened curfew hours. You can now, at least from Friday, travel between GCQ and MGCQ areas already. So this is what Chris Mangon of AAA Equities is saying. This resistance level was actually at 6,030, and we broke through that. There's continuing optimism that the economy's recovery will speed up because of these easing of mobility restrictions. Another thing, of course, is the downtrend in COVID-19 cases. We saw just a little over 1,600 yesterday, so that's much less than the previous weeks that we've been seeing. But we have been up already 4.7%. And even before then, Chris Mangon had mentioned we might be seeing a pullback as people might start taking profits. Nevertheless, another interesting thing to note here is that total value turnover was very robust yesterday. That was at 8.22 billion pesos. So quite a lot of trades. Now, I just want to take a step back and see which ones are continuing those gains. Yesterday, we saw Jollibee, a star performer that reached up to an upside of 9.3% before settling down. But it was the biggest gainer yesterday, and it still seems to be within the top three. You can see that up by 3.5% already in just the first 4 minutes. This happened after, they had announced that they bought an additional 25% stake in the holding entity of Tim Ho Wan for $36.3 million. And that actually increases its investment in this franchise to 85%. Now, recall that despite this, they've actually gone on a spending spree even before the pandemic. They had bought Coffee Bean. They were integrating Smashburger over in the US, and they still have allocated 5.2 billion pesos for capex this year, despite the fact that it was at a net loss of 13 billion pesos in the first half of 2020. That's a huge turnaround from their 2.18 billion peso income. They had mentioned that that was because of the store closures because of the COVID pandemic. Nevertheless, investors seeming to be, excited after it had boosted its investment in Tim Ho Wan. Let's see whether these gains still continue. Another one that I want to look out for is PAL. Especially since that also, saw a massive rally yesterday, jumping as much
Mhm.
as 35%. And I'm just going to take out the 3-day chart for you so you can see, how the local flag carrier shares are now up by 30% in the past 3 days of trade. Now, this is actually driven by speculation. This is according to Manny Cruz of Papo Securities, that the government may take an indirect stake in Philippine Airlines. He says that the thinking of investors is that the government will step in to rescue the airlines, and that it has to fly even if it has no passengers. This is very speculative and nothing definite. Another one that is, giving his 2 cents is Lex Azurin at AB Capital. He says the resumption of flights to more select destinations could be behind this gain of 35%. And take a look at PAL, it's still going up by 0.4%, 7 pesos and 62 centavos. Recall that Finance Secretary Sonny Dominguez had clarified that though they want to help the airlines, they're not really interested in taking a stake. But that does not seem
Mhm.
to be what investors are speculating at the moment. I also want to take a quick peek at our mining and oil counter. After that has been just going off the charts as of late, after, of course, the administration had lifted the moratorium on exploration of oil and gas fields, basically in the West Philippine Sea. This, according to PNOC, they're going to start drilling at the sea next year. So that's already by fourth quarter in 2021. That's according to their CEO, Rosano Brigues. He said that at the Senate hearing. They're also planning to farm out to other players up to 70% of interest in their service contracts. So it's very interesting. That area holds around 1.8 trillion cubic feet in reserves based, of course, on initial studies. We don't know whether that's really going to
Mhm.
happen, but according to their studies, that is happening. But take a look at the PXP Energy is pulling back a touch. It's down by 2.3%. A lot of investors had said this was due for a pullback after having already reached ceiling, trading more than 50% up for a couple of days now. Apex Mining as well pulling back. But you're going to be seeing the other players of the mining counter, Nickel Asia and Global Ferronickel, actually pulling up the counter. That is up by 1.3%. I also just wanted to take a quick peek at Union Bank. We have a lot of news here about the digitalization shift, and this is one of our key, let's say, digital players here, and they have said that about 65% of their corporate clients are now using digital banking channels. That is up from what was only 25% of their corporate clients, which were using those channels in September of last year. And they said even if that's to be expected, it's actually happening at a faster clip. That's according to their vice president, Antonio Miguel, citing, of course, the pandemic and social distancing. Union Bank trading flattish right now at 54 pesos and 25 centavos. And still, of course, on banks and still in markets, if there's anything just that investors are looking out for, it is the next move of the central bank. But of course, Governor Ben Diokno is saying timing is everything. What is he saying right now in terms of monetary easing?
All right, this time around, I want to quote him directly, Dan. He did say this during a credit rating call with Moody's. He says, with a huge amount of liquidity injected into the system, we are fully aware of the need to carefully assess the appropriate timing of the unwinding of all of these measures. So, like what you mentioned, timing is everything. It's really just a matter of when are they going to push through with these policy measures. He says that doing it too late or too early may actually have repercussions on the economy. Now, let's just to contextualize everything, just try to recall here. Of course, benchmark rates so far have been slashed by 175 basis points this year. In fact, reverse repurchase has been reduced to 2.25%, lending likewise at 2.75%, and then deposit at 1.75%. And so far, these moves really haven't trillion pesos into the system. That's according to BSP Governor Ben Diokno. That is equivalent to 9.6% of the country's GDP. And that liquidity support really is manifesting itself in the spike of corporate bank issuances that at least is afforded to BSP Deputy Governor Francisco Daquila. He says that bond issuances have spiked from January to August. Get this, during that 8-month period, issuances have actually grown by 67% to 540.9 billion pesos. That compares to just a little under 324 billion pesos back in 2019. Also, if you try to take a look at the data from the Philippine Dealing and Exchanges Corporation, it would show that corporate bonds were actually up 126% compared to 2016 figures to 1.48 trillion pesos. And Daquila is saying that really is mitigating the impact of liquidity injection and lower demand for bank lending, which as it is only rose to its lowest since 2006 to 4.6% back in August. Recall that the BSP in March actually had 300 billion pesos worth of securities from the Treasury to support the pandemic response. At the same time, early this month, they also had 540 billion pesos in direct provisional advances to the national government via a loan. And according to ING's Nikki Mapa, these moves are actually calming market panic here. The BSP's bond market really easing market fears, leading to stability in the market as it remains open. As the BSP remains open to buying bonds on a daily basis, capping any possible rise in bond yields. But at the same time, removing the support, according to Nikki Mapa, is crucial. It has to be properly timed and communicated so that the market will not panic should it transition to a BSP-less operation.
Exactly, and a lot of analysts watching out for the BSP's moves, especially as it lends money effectively to the treasury to spend for this pandemic and to spend on healthcare. Just quick peek on our yield curve here. On my terminal, you can see the 10-year return is around 3% lang, Jess. So, quite a good time actually for people to be borrowing money here as the interest rates are at an all-time low.
Now, here are other headlines we're keeping our eyes on. The World Bank said it is willing to support Philippines' procurement of COVID-19 vaccines once it becomes available. The multilateral bank has since approved $1.2 billion worth of budget loans and some $470 million in project financing to boost the country's funding and COVID-19 response. The Finance Department earlier said it would tap the new loan facility being offered by the World Bank and the Asian Development Bank. The government is looking to fund the vaccination of around 20 million Filipinos, the cost of which ranges from 20 to 40 million pesos. Several credit raters and financial houses said the country's economic rebound would be hinged on its capacity to contain the virus and revitalize consumer spending. The small committee of the lower house on Tuesday has agreed to hike the budget set for vaccines from 2.5 billion to 8 billion pesos. The government is looking to borrow 38 billion pesos to cover its full obligation under the Murang Kuryente Act. RA 13711, or the Murang Kuryente Act, requires the government to subsidize certain components of power bills that help offset stranded costs and pay down debt incurred by the government when power assets were publicly owned. The thing is, the Budget Department allocated only 8 billion pesos for this purpose, leaving the Power Sector Assets and Liabilities Management, or PSOM, to find additional financing to cover the overall estimated cost of 46 billion pesos. PSOM said borrowing will result in over 5 billion pesos additional spending due to borrowing costs, which include interest, guarantee fees, DST, and gross receipt tax. Senator Win Gatchalian says they will ask the Finance Department to look into the borrowing policy because 5 billion pesos is borrowing cost.
The Public Works Department has signed a 3 billion peso contract for the detailed engineering design of the Bataan-Cavite Interlink project. Now, under this program, a 32-kilometer four-lane bridge will be constructed to connect Barangay Alas Asin in Mariveles, Bataan, and Barangay Timalan in Naik, Cavite. Now, once finished, the interlink is expected to cut down travel time between the two provinces from 5 hours to just about half an hour. The detailed engineering design activities for the interlink project will be carried out over the next 15 months. Meanwhile, San Miguel says it will soft open the newly completed Skyway Stage 3 project in December. Now, that 70 billion peso project links Hilpuyat Avenue in Makati to the NLEX Toll Plaza in Balintawak. The company announced it finished the project ahead of the October 31st completion schedule. For its first month in operation, motorists can use the entire Skyway 3 for free. Now, amid stay-at-home regulations, consumers have begun to realize the importance of investing in their safe spaces. We have with us the chairman of up-and-coming property developer ISOC Land, Michael Cosiquien, to chat about how they are positioning and, of course, pivoting during these unprecedented times. Good morning, sir, and welcome to the broadcast.
Good morning, Danie. Good morning, Jester. Thank you for having
Good
me.
morning.
Sir Mike, just tell us for our viewers here, you guys are a new firm, and what is ISOC all about? How is it different from other developers? How is it doing during this pandemic?
So, for ISOC, basically ISOC stands for our values, which is innovation, sustainability, operational excellence, and customer commitment. Our philosophy is very simple: invest in long-term businesses that we can grow and be a leader in these markets. And we want, of course, to share this growth with with the people working with us. Our mission is very simple: is to uplift Filipino community through technology and world-class infrastructure. So ISOC Land, which is our brand is Island, has several projects in the pipeline. Actually, we have already launched Island Bay Plaza in near Mall of Asia complex. It's an 12-story office project, right? We're tapping off next this November, and we're expecting to complete this by first half of next year. And we have also our residential project, which is Island Residences Sukat, which we've already launched just before the pandemic in February this year. So the Tower 1 was already, we have already sold out the one-bedroom units for Tower 1, and we're soon launching the Tower 2. And we're soon to launch Island Cloverleaf in Balintawak.
Sir, how has the pandemic changed the game for you guys? Have you changed your strategy in any way? Are you focusing, for instance, in different areas right now? Are you still trying to complete the targets by providing, let's say, easier payment terms for those that want to buy these residential projects? And to what extent was your completion targets affected?
So actually, Danie, I believe all businesses have been adversely affected by the COVID-19 pandemic. But we are fortunate that we are geared toward addressing the needs and challenges posed by this new normal. So, like we're building sustainable homes. We have other businesses like cold chain and telco infrastructure. So, but for Island, the advantage of Island is that even before the pandemic, we made sustainability a guiding principle in our projects. And we believe our home buyers have recognized the practical benefits of living in sustainable homes. So, with that, hmm?
Go ahead, Jess.
Go ahead. Go ahead.
Please.
All right. So, okay. So, I've been hearing you say about sustainability. It's one of your cores. What exactly is sustainability? What do you mean by sustainability, especially when it comes to property development? And why zero in on that?
Even before we have established ISO, we're already into sustainability. So, because we know that climate change is real and now, so we are focusing on sustainability and health and wellness because we believe that will be the only topic for everybody in the next 20 years. So the difficulty in doing sustainability projects, developing sustainable projects, is that it has to have more attention to details. It has to have more careful planning. It may be costlier, and you have to have a higher level of commitment to quality construction. But our focus is to not just to make sustainability accessible to the rich people, but we made sustainability more accessible and affordable to more people since we focus on the mid-scale market. Actually, that's our differentiator, and we believe this sustainability definitely has a positive impact on people's health and wellness because they will caring for the environment, making sure that we are caring for the welfare of the next generation. Definitely, uh, definitely they will have a better quality of life. So that's our focus right now.
Sir, is the Philippines ready for this sustainability shift? I mean, in principle, it's such a great idea to have, even in terms of renewable energy mix, etc. But when things become much more costly, like you mentioned, even the construction becomes costly, does that not get passed on to consumers? Do people need to pay a premium, let's say, to live in more safe spaces, to live in more energy efficient households, and are they willing to pay?
My experience with sustainability before I even have a renewable energy company. My experience in sustainability that pays for itself. If we don't do sustainability now, it won't be it will be unsustainable for us to continue. It will be very expensive for us. We know that's happening, like what happened now in the pandemic. Um, there, a lot of scientists are saying that this is connected to climate change. So we have to take care of our environment right now to make our lives to have a better quality of life, to make our lives more affordable. So I think the Philippines should be ready for this. This is the only way to live.
And having said that, sir, can you nuance us more about the mix of your developments? Is it really primarily just residential, or are you also slowly venturing more into commercial and retail and eventually leisure as well?
Actually, our first project is an office development in Mall of Asia called Island Bay Plaza. It's a 12-story project. So that will be about to top off by next month, November. And we're going to complete that by June next year. So actually, it's already 50% leased out. So that's one of our projects. And we have other office projects in the pipeline, like the ISOC Tower in Ortigas. Then we have a project in Pasay Road. And we've also, of course, we're focusing now in the island residences, which is the first project is in island residences Sukat, which I mentioned a while ago. The tower one has been, we have sold out the one bedroom units, and we're going to launch the tower two by next month. And also we're about to launch also our island residences Cloverleaf in Balintawak. So these are all very good projects and very good connectivity in prime locations and very sustainable design and plan.
Sir, why do you think that your commercial project will still be able to sustain the occupancy rates, given the fact that, of course, retail spaces have been closed right now? There's a shift towards e-commerce. There's a shift towards working from home. Why are you still banking on commercial spaces?
Um, because we know that with the pandemic and there's an exodus of POGO companies from the Philippines. So there will be a lot of real estate companies affected. But our office projects are located at very prime and strategic locations. And our shift is now is to focus on other markets like BPOs and corporate offices.
All right, sir, as well, we have this recent report here from La Modia, online property market here, saying that really the demand coming from OFWs for residential properties has been sustained despite the pandemic, and more of them are actually venturing outside of the metro. Is this something that you are also seeing as a trend when it comes to your developments?
So in our development, like in Island Residences Supat, so the, we have also a major part of our home buyers are OFWs. But we've noticed that the majority of our home buyers are actually from the neighboring communities around our projects who wants to upgrade. Up and coming professionals who wants to live near their places of work or the CBDs like BGC or Makati since it's very accessible. There's a lot of connection in transport. And we also noticed that there are also parents who are buying the property for their children. So those are our buyer profile.
And sir, finally, before we let you go, I just wanted to ask a quick question on your future plans for the company. You're a very well-known entrepreneur, actually, even before you started this ISOC land, of course, having been one of the co-founders of Megawide in the construction area. Sir, are you planning to, to integrate these sort of skill sets as well when you are developing your properties? Are you going to venture into other types of industries as well that might be linked to infrastructure? And to what extent are you hoping to grow, given, of course, the situation in terms of economic recovery in the Philippines?
We always say in ISOC that the future is now. So since our philosophy is investing long term, like what's happening now, we believe there's come and go. When I started my previous company, it was months before the Asian financial crisis.
Mm.
So if we have a long term timeline, then the crisis is just part of your timeline. Then you have to grow with that crisis, and we shall seize opportunities during good times. So our focus is to continue our expansion and of course offer meaningful projects to our home buyers and customers. But because of this pandemic, we had to maybe recalibrate our timelines. But I think the future is still bright. The market will still bounce, and we're continuing with what we're doing.
Sir, one last question. Is an IPO in the works?
Is it something in the offing in the near future, maybe?
Actually, to be honest, we're focusing on what we're doing now. That may be at the back of our minds, but our focus is really to serve our customers and our home buyers.
Okay, of course, but nevertheless, a growing company with a lot of exciting prospects there. And as you mentioned, sir, staying resilient despite the pandemic, with the need, of course, for more sustainable housing here and more mindful consumers thinking about their safety and health. Thank you so much for those insights. That was, of course, Michael Cosiquien from ISOC Land.
Okay, thank you, Danie. Thank you, Jester. Thank you very much.
Thank you.
Thank you, sir.
And that's a first look into the business day. Today's October 21. I'm Danie Laurel.
Catch us again tomorrow at 9:30 a.m. I'm Delos Santos. We are One News.
Red because I don't know where to put it. Good morning, blah, blah, blah. Okay.
Sean, tawag mo na